in the market today. So we're just going to have a look at the art of Heikin-Ashi candles. Basically, they're like normal candles, normal candlestick patterns, but they create normal candlestick patterns, and we interpret them as normal candlesticks. But they are much cleaner when it comes to looking at trending markets. They're no good really when markets are going sideways, but they're really, really powerful and clean in strong trending markets, and time frame independent, asset independent as well. I really like them. I've used them for many years, and just to give you certainly when we've got strong trends running, just to confirm that this trend is still running, the strength of this trend, and how we interpret the candle and body size. So let's crack on before we get before we start. So my screen's a bit mixed up today. So as usual, if there's any questions, stick it in the chat box, and we'll have a look at it. So let's crack on. Okay, so those of you who are new, I've been in the market for well over 20 years. My approach to trade has always been the same. Do something that's probable, simple, and look at the time frames that's trading that fits your mindset. And most important of all is to know yourself, because trading is a mind game. And excuse me, we've done many webinars over the years about mindset and mind games in this business, and that's the principal trick that you've got to get over. Do what's probable, keep it simple, and it really is all in the numbers. Let's move forward. So what we're going to look at today is the tradition, history of Heikin-Ashi candles, HA, as we see them on the charts, why we use them, how they're created, and the interpretation of them, and the messages of the wick. The wet message and the power of the wick is really, and the size of the body of the candle is really, really important. I mentioned that a few times today. Obviously, as with anything in trading, it's not a holy grail. There isn't a holy grail in trading. There's limitations to anything we do. Any approach we take, if somebody's told you otherwise, they're lying to you or trying to trick you or something, but they're deceiving you at the very latest, or deceiving themselves. There is no holy grail when it comes to trading, as with anything. And there's pros and cons, and Heikin-Ashi charts look just the same. Lots and lots of benefits, but some significant issues as well. But if you understand that, you appreciate that, you're aware of that, trade accordingly. So it was the father of candlestick. Let me just get rid of that. What we can't see the one caption. It's an whole slide. So candlestick trading was actually created hundreds of years ago. A rice trader, Saka, in the Saka prefecture in Japan, and he was a doji rice trader in the doji rice market in Osaka. Second, it was the before Tokyo capital of Japan, feudal Japan, and it was a guy called Homa, Mushimisha Homa, to a right old age back in the 18th century. The father of candlestick charts, we say, and he wrote down the Sakat constitution, and that's where candlestick trading originated. We trace it back to Japan. That's what they call Japanese candlesticks. It was brought to the West by a guy called Stephen Leeson back in the 70s. A long time ago now, but these candlesticks are very much a Japanese approach to trading. And Homer then adapted the traditional candlesticks by amending the actual maths that was done to create the candlesticks. And Heikin-Ashi, there isn't a direct translation to English and Japanese, but average bar is the interpretation of it. And he was incredibly successful. Rumored to have made not 10 million, but $10 billion in today's market. Became very, very renowned within Japan at the time, and even he was used as a financial advisor for the government, and he was even raised to the rank of honorary samurai. And in feudal Japan, all those centuries ago, it was an incredibly structured society, and to be given the rank of samurai, not from birth but from the emperor and the government, was incredible, incredible honour. So honour, due to his finesse with trading, became very highly regarded in Japanese society all those years ago. So that's the background. But why do we use them? Why use Heikin-Ashi charts? That can be. I hate the word predict. I've written it down here. You can be faster with Heikin-Ashi chart. Predict is one of those words that I don't really like using a lot, but it gives you that clarity. You know, they can be easier to interpret than traditional candlesticks. Even when you've started with traditional candlesticks are pretty straightforward anyway. You know, we've got open, high, low, close. It's very clear to understand the candle, the body of the candle, and then all the different, hundreds, not thousands of candle patterns and interpretations that can get a bit overwhelming. But certainly in trending markets, Heikin-Ashi candles, because of the formula that's used to create them, the trend can be very clearly identified, and it takes out a lot of the noise. That's why I like them in particular. So they're both an indicator suggesting sentiment, trend, momentum. It can all be encapsulated in one candle. See, the bigger the body of the candle, the bigger the wick, the blacker the wick. Very, very key when you're interpreting what's going on with Heikin-Ashi candles. And the other key thing, as I said at the beginning, that asset and time frame independence. So you can use them on 1 minute charts, 2 minute charts, all the way up to 2 month charts. And higher, so the interpretation is the same on the time frame that you're trading. So they're not restricted, not better at high time frame than low time frame particularly. The only issue, the caveat I would say on that with regard to time frame is the lower the time frame, the distance from the actual price action can be relatively greater than it is at higher time frame. But we'll explain that, or I'll explain that more as we go through the session. So, as usual, guys, any questions, stick it in the box. We'll cover it there and now. We'll come to some live charts as well later on. We'll finish some of the slides. So, basically, it's a cleaner chart. I mean, I'm just starting to choose it here. I don't know if you can see that on the screen, but this bit here, this bit here, you can see, this is a traditional candlestick, so we've got a mixture of green and red, and this big downtrend here. See, Heikin-Ashi candles don't change colour, it's clearly negative, clearly positive. Bit of hiccup on the red and the green, and on the way up, you can see it's very clean, keeps you in the trend, keeps you moving down, even in this big collapse here, this price here. Huge candles, usually they're movements on the day, and a big green candle at the bottom here moved all the way down before we turned around. But we'll have a look at that. My voice is very low, is it? Hang on, let me just have a quick coffee. Let me check the audio is working, my friend. It might be that microphone's not on properly. Let me just check that for you. Thank you very much, my friend, for putting that up. Just come back. That's why I've got the wrong microphone functioning now. That should be better now. Is that better? My friend, hopefully it is. Right. So hopefully you've heard what I've been saying. Basically, Heikin-Ashi candles, great for trends. The formula is different to normal candlesticks. They were created and invented by the same guy that created initial candlesticks. And as you can see here, as I was just saying here, this is a normal candlestick compared to a Heikin-Ashi candlestick. it's much cleaner, or remains much cleaner. We'll have a look at some live charts in a minute. I'll compare the two, but this is just a screenshot. Normal candlesticks and Heikin-Ashi candlesticks. You can see this is completely red here. We've got a bit of green here, and the downtrend, red again, but multiple green candles here. This all remains all red, so it keeps you in that downtrend here. You know, up bit of red there as we got it out, but still green on the retrace here. More hesitation, red, mixture of red and green there, so it's cleaner. To the upside. Okay, so thank you for that. Right, so thanks for pointing that out, because the other microphone is a long way away. It's probably why it sounds so quiet. Well, hopefully that's nice and clear now. So that's the basis of Heikin-Ashi candles. So normal candlesticks, as we know, hopefully as you know, are created or present the open, high, low, close, or the OHLC. And all candlesticks, obviously they're fractal in nature, so it's the whatever time frame the candle is presenting, each candle represents that time frame. So whether it's a day, 5 minutes, a month, a week, whatever it is, it doesn't matter. The same information, the open, high, low, close, is presented in that candlestick, and that's why they're so powerful, and that's why they're so popular. I don't know any traders now that don't use candlesticks, to be honest. I know a few investment managers that still use line charts, but that, you know, they're holding things for months and months at a time. But most of active traders are using candlesticks, and I say Heikin-Ashi is just a modified formula of the traditional open, high, low, close. Okay, it's a little bit different, but I like it simply because of the smoothness that it provides and the clarity it can provide on a station. So if you're interested in the maths, I always people say, "Oh, it doesn't matter. I just click on Heikin-Ashi candles now on my TradingView chart or my MT5 or whatever, and we just present it as it is." But it's important. I always think it's important to understand where it's come from and why Homer, back in all those years ago, thought he needed to do this, and it was to do with clarity, and it helped his trading become very, very successful. So there's 4 elements, as with normal candlesticks. So the open, high, low, close is now the Heikin-Ashi close, the Heikin-Ashi open, the Heikin-Ashi high, and the Heikin-Ashi low. So this is how the formula is created. So the Heikin-Ashi close, so the close of the candle is the average price of the current bar. So it's not necessarily the actual price, it's the average price of the current bar. So it takes the open, the high, the low, and the close, divides it by 4, and gives you the average of the price of the candle that's on the chart. So that's the close point. The open on a Heikin-Ashi candle is the midpoint of the previous Heikin-Ashi bar. And this is the big difference between Heikin-Ashi candles and normal candlesticks. We get this averaging. So we've got an average price for the close, and then we've got the midpoint of the previous Heikin-Ashi bar. So every single time you see a new Heikin-Ashi candle starting on your chart, it's always in the middle of the previous Heikin-Ashi bar, and that's what this is saying. So the open is the Heikin-Ashi open of the previous bar equals Heikin-Ashi close of the previous bar divided by 2. Okay, that's the maths that's behind it. So every new Heikin-Ashi candle opens in the midpoint of the previous bar, so you know where it's going to open as far as that bar is concerned. It's not necessarily where the buy and the sell prices, the bid and the ask prices are, but that's the midpoint of the previous Heikin-Ashi bar. The high point on a Heikin-Ashi bar, whether it's the body of the candle or a wick to the upside, is the highest value of the set, and the set being the 2 candles we're creating. So the high, Heikin-Ashi high, is the maximum high of the open and the close. Okay, and the flip side of that, the low point of the Heikin-Ashi candle, is the minimum price of the value of the 2 candles, basically, or the value of the previous set. Okay, so it might be an idea if I just bring in my live chart, actually, just to demonstrate that before we crack on. So let me just pull this in here. There, hopefully, can you see that? Okay, let's just get rid of. Sorry, it's on a small screen, so it's not very. Get rid of the order panel. There we are. It's slow. Sorry. Let's get rid of the order panel. Let's get rid of that. So this is. Hopefully, you can see that. Let's move that down. There we are.
This is the dollar. This is cable, so it's pound against the US dollar. It's a 2 minute time frame. You can't. Can you see that yet? There, 2 minute time frame today. So these are Heikin-Ashi candles on the 2 minute time frame. So each candle is 2 minutes. Um, um, and green means up, red means down. And as you can see, if we look at the candles, you see the new candle, the open of this candle here, where I am at 1418, has opened in the midpoint of the previous body candle. So you can see that's the open. So here we got the opens there, the close is there, the high is the wicks that are on there. There aren't actually wicks on there, so it's a bad example. But you can see body candle, that's negative, that's turned then green. We'll come to this interpretation of the colours in a minute. So that's Heikin-Ashi candles. If I just flip to a different setup, so this is a Heikin-Ashi candles. If I take the and with TradingView, you can just present it as a Heikin-Ashi candle. If I just go to a different layout, if I go to a standard, the standard exponential moving average, so it's the same time frame. The sterling cable rate, pound against the dollar, 2 minute time frame. So it's the same candle setup, but as you can see, the candle colors are a little bit different with normal candlesticks. There's more green on this one as we've been down. Just flip back to the Heikin-Ashi one. So this is live as we're seeing it now. So we go back to the Heikin-Ashi candles. See, we're still all red here, aren't we? So you might not have been panicked to close that short trade because it's remained red all the time. Obviously, the volatility has been huge here. Something's happened here on this 1454 candle as we've moved up. So it's a cleaner swap. So we'll come back to that in a minute. Okay, so don't worry about that. So that's how it's set up. So we got still like a normal candle, open, high, low, close. We've got the close, the open, the mid, high, and the low for our Heikin-Ashi candles. Okay, so that's the background of them. Okay. How it's created. So as I said, it's like a normal candlestick. It looks like a normal candlestick, but we use that different math. So it looks the same, but it's different. When we use in the time scales we use, and it's really up to you. As I said at the beginning, the time frame or the time series, it's up to you how you use it. So we just demonstrated 2 minute candles there. And you can use them on the hourly, however you want to do it. The way I've got it set up in my trading trade locker charts, I've got red and green. So green for positive, red for negative, or down periods in red, up periods in green. Again, change the colors as you want. And the beauty of it, again, is this idea that it smooths the price action. There's a lot of information going on there. A little bit, people argue there's more than a simple candlestick because you've got a bit more momentum. But obviously, with all the interpretation around candlestick formations, that's perhaps not as significant as some would make out. I would argue. So that last point, take with a bit of pinch of salt. 2 points to bear in mind, though. You don't know the exact price at which a given time period opened or closed. Obviously, when trading, this can be a bit of a problem. So, as I said, perhaps sometimes when you're actually you're comparing a real live normal candlestick with a Heikin-Ashi candle, it might be better to have them side by side. I don't really get involved in that because you can still see the price on the chart. It's just not the candlestick pattern. Let me just show you. Let's see what I was trying to show you there. So this is our normal. Is this a normal? No, this is our Heikin-Ashi candle. So you can see here the candle is here. And zoom that up a bit. I don't know if I can zoom it any higher. I don't think I can. So this is the candle that's at the moment it's open, but our bid and ask price you can see is at the top end of the actual candle. Okay. Obviously, if we flip back to the normal candlesticks here on our other setup, you can see that the price action is within much more normal for you. It's it's within the body of the candle. So you obviously don't get a different price at all. It's just where the bid and the ask sits with regard to the candlestick, and that's all to do with the averaging of Heikin-Ashi. I hope that makes sense. Okay, so there's the normal candlestick. See our price is around our body of the candle at the bottom end. Obviously, it's moving around a lot because we're in a 2-minute time frame. If we go back to our Heikin-Ashi candles, the VWAP setup, you can see, because of the calculation, the open, high, low, close on with Heikin-Ashi, the bid and the ask are at the top end of this candle setup at the moment. Okay, so what this is suggesting is this down leg, it may be finally over because we've gone from red to green, or looks like we're going from red to green, but it's a 2-minute candle, isn't finished. So that would have been over. So down leg would have been over, and I'll come in and explain. We might have got out a bit earlier than that, given that we've had lots of wicks to the upside and downside. However, this is now looking to go long, but obviously if you went long with this candle, or when this candle completes in 2 minutes, because it's turned from red to green and it's got no wick to the south, which is a strong indication, you would get in until this price up here. That's one of the issues with it, 36.44. Whereas if we, again, let's do this, I'm getting a bit ahead of myself, but if we go back to our normal candle, it's still around the candlestick. So the candle has turned there, but we don't know whether this is going to go red again, do we? That was green. There's a bit of a wick there, so maybe we would have got in there. But you would get in on this candle here. We're just talking about the pure candlesticks, and that's the other thing about Heikin-Ashi. You can just use the pure price action, the pure candlestick, to get you in and get you out. Obviously, with normal candlesticks, it's not necessarily that you're not that comfortable sometimes with getting in and getting out. Okay, so anyway, we'll come back to that in a minute. So that's why some people have both normal candlesticks and Heikin-Ashi candlesticks side by side or on 2 different screens. Okay, so as I say, it looks like a normal candlestick. So we're looking for strong trends, and that is key benefit of Heikin-Ashi candles. So as the bodies, so we want big bodied candlesticks. When the bodies get weaker or smaller or begin to change color, then a reversal or correction is on hand. We want to get out of the trend or reduce our exposure in the trend, and that's what we were sort of seeing there, even on those 2-minute candles there on the cable chart. It's increasingly uncertain respect to the prior trend you were trading. So obviously in the higher time frames we stayed longer, but even on that short term, as we saw then, it was slowing down. So even here, if you got in here as that had gone from red and then you got out because it had gone green, and then we'd gone this is the normal candlesticks, isn't it? Go back to the Heikin-Ashi ones, or V1 ones. So we'd been short here, got out when it's gone green, it's gone red again, but that's a strong one because I'll come to the wick in a minute. So we're short, then out, long, but then out because it's gone red. Now short here on this one, all the way down, and this is now suggesting, because we've got wicks to the top and the bottom, and another doji candle here, another doji candle here. So this is really run out. So you might have, if you opened down or 3 or 4 lots as this has come down, you might have closed 1 or 2 of them as it started. Still red, so you're still in it, and not got out until you've gone green here, and then gone long here because there's no wick to the south here. So it's all about the wick location. So this is now long here in Heikin-Ashi speak. But again, as I say, we would have not gotten in until here. So we would be only just in the money using this candle pattern. Okay, that's why sometimes, especially when you're scalping, it's going to be a bit more difficult scalping. On the higher times, it's much, much smoother. And we'll look at the higher time frames as well in a minute. Okay, so that's what we're looking for. So we're looking for strong trends to stay in for a while. So we go up to the higher time frames, you see, how strong it's been for like the stock market run. So what we're looking for are Heikin-Ashi candles with no wicks. I shaved Heikin-Ashi. You're trading in the uptrend. The current candle shows no wick to the downside. The trend is very strong. It's best to stay in the trend until either a down candle appears or a bottom wick forms. So that's a different way of getting out. So just the wick forms on the current coloured candle, or you wait till it changes colour completely. So again, like we saw there on that 2-minute chart, it's a way of doing it. And it's a great way of managing your trades, active, intelligent stops as you're trailing the stop loss down. So you only get out once the trend is definitely over. And again, as we've just seen on the the live charts there, the standard candles were suggesting we had the mixture of red and green. The Heikin-Ashi candles stayed the same red colour all along. Okay, next time we'll bring the charts up again. We'll look at a different time frame. We'll take it up to another time frame. You see, it's can be quite smoother. So no upper wicks on the way down. You can see here. This is just different. This different screenshot. This is black and empty candles. So net black is down, white is up, or not unfilled is up. Filled candles are down. But you can see here a little tick up. Then we got that's a strong entry. That's a might of maybe it's not going to happen. Maybe it's not going to happen. Then we big strong entry. So more entered on that one there. Entered on that one. You might have added to your position here on this one because the body of the candle has got bigger. The body of the candle is smaller on the next one, but it's still no wick to the north, is it? And this is a daily time frame now. You can see this. So these are big, long moves. These are many, many numbers. It's going back 10 odd years when I first looked at this. This is 2024. So you can see what the S&P was down under 2,000. Big move down here on this day, and then another day there, and then all of a sudden, whatever day this was, the 19th, or we suddenly went from downtrend for 1, 2, 3, 4, 5, 6, 7, 8 days, and we'd been strong for 1, 2, 3, 4, 5 days. Whether that was a week or not, who knows? Who remembers? But we would have been out here because it's gone from black to clear. Just get out because we've gone from a big strong downtrend to quite a strong uptrend as well, because we've only got a very little week. The following day, the uptrend suddenly kicks in, and we get a big bodied candle the day after that one as well, and then we run and run and run. So no upper wicks on the way down, no lower wicks on the way up. The message is counterintuitive, but the force is strong. This is a slide I've taken from a guy called Trevor Neal, and thank you for those, Trevor. And that's his words, not my words. But as you can see, this is the S&P 500, and strong trend down and strong trend upwards. You can see, even as the trend has moved up, the power of the trend has suddenly run out. The bodies of the candles are shrinking. However, at no point until this point here, all the way here to the whatever it is of the month, it's October to December, this run. So you can see it's October to December. Here, sort of into the end of November before we get, there was one there at the beginning of November, and there's another one there, but the body is still that isn't even, and that's not a black candle. That's still clear. It's just very, very, very narrow body. Looked like we were going up. May have run out of steam here, but this is this is the 5th of or was it May? I'm not sure. Anyway, the trend is very much to the point, and that's the point of Heikin-Ashi candles. And again, if we go to the live charts, we use the same charts we've been looking at. So this is Heikin-Ashi candle, our 2 minute. If we go up to the let's with our oops. We've lost it. Lost my. Let's try the live ones. There we go. Nearly. So what's been going on today? Well, not a lot, really, has it? We've had. If this is our start of the day, it's the hourly. These are hourly candles. So we'd had a strong move up on Friday. We've started negatively here the new week, a big down candle there at 12, and it's been going down, but it hasn't had any momentum. We've had one without an upper wick, and then very small bodied candles. Not surprisingly, the US is closed today. Canada's closed later today as well. It's President's Day in the United States, so there's not a lot of driving this. There's no major news driving. That wasn't a big either political or economic news announcements over the weekend, so it's all relatively quiet. We did look to try and move higher as the European session started there, the 8 o'clock candle, but we still had wick to the south and the north, so inconclusive. That looked fairly positive at 10 o'clock, but we still had inconclusive moves, and then a big move up, and then we've gone south. So there's no clear trend here on this chart, except from last week, on Friday. That was a strong bodied candle. There was one earlier in the morning there. Looked like a strong move down. No wicks here, no wicks there. Turned around immediately, so you didn't get left in it. And it sort of drifted high. That looked like a positive one. So if you'd got in on this one here, the conclusion of this, you'd have got in somewhere up here. You'd have, probably not made much, although we've had like 1, 2, 3, 4 hours thereafter, and then it stopped into the close, so it's drifted a bit high and then closed out. But it is the end of Friday. There's not a lot of volume around there. It's, actually using live charts today, it's not great because there's not a great deal of volume because it's Monday. But the principle is say so. What this is saying, there isn't any clear trend, so stay out. And that's what's one of the arts of trading as well, is to stay out here on this higher time frame. But what we can interpret from this is that the cable's moved up this morning, and then it's ran out of steam, and it's sort of biased to the downside. So the hourly trend is to the downside. If we go up another step to the 4-hour trend, 4-hour candles. So this is Friday. This is Thursday, Friday down, and then we turned around in the middle of Friday here, the 4-hour, and then moved up, and then again it ran out of steam quite significantly. That's the big last candle of the week. And then we've run out of steam today into the new week. Not a lot of movement. We've put a high this morning at 136.62 and a low so far today of 136.35. So we've got like a 30 pip range on cable if we're interested in trading it, but it's really sideways action, isn't it? On this setup on that 4-hour time frame. Okay. So, and then we go another step up to the daily time frame. So again, with strong, you can see the strong trend. This is why it's so strong at higher time frames. Big move here at the end of January into 138, and then all of a sudden out right at the end of the month, and it's been drifting low into the 6th of February, and then it's sort of chopped around since then. So choppy market, no clear direction as far as height, and that's what the higher time frames telling us. On cable, it's biased to the upside because we're over 136 and 135, but there's no clear trend at the moment. And so you wouldn't, as Heikin-Ashi trade it, you'd be sitting on your hands waiting for another strong bodied candle like we've got here. We don't care whether it's up or down. So it's strong move here. This was a strong entry. Looked like we were moving down, but then we were out here. So it would have been some pips on show there for about a week, but then we're out. Okay. So that's what Heikin-Ashi can tell us. And there, here we are, same thing. This is dollar on the daily time frame again. So strong uptrend, strong downtrend, retrace, strong downtrend, very, very strong uptrend here. This is August 2021. But, it's all about the interpretation of the market. Gold, well, let's see. Yeah, somebody's asking about gold here. Let's just bring in, let's do the same thing with, I've just used cable as but let's just use a different asset. Tells what what's happening. Again, if you try, I don't know what Matt, if you're trying to trade this short term or long term, I don't know if you mean today. There's probably not a lot going on, so just be careful. Obviously the holidays are starting in Asia. The lunar holidays are starting. China's closed all of the week. Many Asian markets are closed for the lunar holiday. Ramadan starts as well on Wednesday, so just be aware of different is what's going on. But if we have a look at gold, let's have a look at the markets channel. Look at metals. So what's happened? Well, unsurprisingly, as we know, it's been a very, very strong uptrend. Let me just get rid of that in the gold market, isn't it? But what does that keep popping up? What is the Heikin-Ashi? What's our hike? Let's come back to. Sorry about that. Hang on a minute. I'm just. You asked about gold. Right, let me just, right. Let's get rid of trade. Let's get rid of the markets panel. I don't want that either. It's very slow today. Oh. Losing my connection for some reason. What's going on? Right, so there we are. So the gold market has been very, very strong. Again, you didn't need Heikin-Ashi candles to tell us that. Really strong, but look at the almighty sell-off we had there at the beginning of the month, and we're still, there we go, you can see we are still absorbed, we're still encased by the down move we had right at the beginning of the month, and that might be the case for the rest of the month. So we're still moved in there. What happened? Well, we moved lower. We went under that 4,500 on that day, didn't we? And then we've sort of drifted higher. Looked like here, the 9th, the 10th, and the 11th looked relatively positive. Looked like we were moving up. But see what happened? Again, you see the interpretation of the Heikin-Ashi candles is big start on the 9th, still very, very positive on the 10th. But the body of the candle by the time we closed the 10th was smaller. And then the following day, still positive, the 11th, but we were a smaller bodied candle again, but no wick to the north south. So it's still a positive move. Immediately, you'd have got out on the 12th, but not short because we've got wicks to the north and the south, top wick, bottom wick, top wick, bottom wick. The body of the candle on Friday was bigger than the body of the candle on Thursday. So that's suggesting perhaps we are more weakness. However, today, without, again, obviously we haven't got the US market, so be careful about interpreting too much into that. Chinese markets are closed, so hence careful with that as well. But we've got a very small bodied candle and no clear direction. So we are directionless, basically, as a trend, because we've been huge, long run here, all the way green, 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 green. Big shock sell-off. And it's presented as 2-day candle. So this is sideways. So as far as Heikin-Ashi is concerned, it's biased to the upside today. Matt is what you're asking. So that's an upside candle. So if we come down the time frames, might be looking to look to buy this or bid this on the hourly time frame. For some reason, it's really slow. But this morning, it was short here in the Asian. It's been long in the European session. And then it would have got out. And that's looking a week short on the conclusion of this candle, but we're still 45 minutes before that candle's closed. The last 3 hours have been negative, so the lower time frame should be biased to the downside. That's what we're saying here. We've ran to our European high here. 11 o'clock this morning was 5,016. We're just hanging around the 5,000 level, having recouped it today, so that's the story. So if you're trying to trade this, say, on the 15-minute time frame with Heikin-Ashi candles, you'd have been long this morning and they got out there, long, still green out there, long out there, but the wick's a bit iffy, short there, out there, short there, added there, potentially then out there. It's not up, and this is looking, as this concludes now, at 30, that would add to another short position on the 15-minute time frame, Matt. So it's, if you're trading it, it's, trade what they can. And this, all I'm doing now is interpreting the Heikin-Ashi candles. That's all I'm using. I'm not using anything else. I'm not using any other indicators. I'm not using, any other volume or anything. It's just simply on the Heikin-Ashi candles. And, you take your trade, you take the result. So this is biased to the downside, as we saw on the hourly chart, and the 15-minute chart is also sort of now it's been chopping around a bit. So be careful. The 5-minute probably also been biased a bit negative, a bit more chopping than indeed it is. There we are. So nice move down there. Strong, looked like a strong move up there at 14.35. These times are wrong. These times are not the trading times, but that was at 35 minutes past the hour, and now at 20 past. This is saying 15:15. It's actually 1:15 on my time frame. So this is server time. This is 2 hours ahead of GMT. The time on these Heikin-Ashi candles is just where we get the feed from. But that is quite a strong short on that 5-minute time frame, is what that's telling us. That candle there, but we'd had that there as well. We'd moved down quite a bit. Looked like we were moving up, but that again, because it's only small wick, some might have got sucked in on that one. But that's the rule. I would, the more conservative rules just go short on the completion of this candle. Obviously, the caveats is where are we in relation to the day? Well, we're still, this was this morning, 7 o'clock. We're all the way down here at 4963, and we're at 4998 at the moment. But we sort of just ticked under the key 5,000 level. Are we going to move a lot away from 5,000? So again, Matt, depending on how you're trading it, but that's sort of biased short. There we are. So we would have gone short on the completion of that candle, definitely. So we can come back to that in a minute. I'll just leave a line on that. So we'd have got short on there. As you can see, we'd have got filled here at 499935. So I'll just put a little mark on that. See how that would have gone. That's where we would have got filled down on the completion of this candle. There we just see. Okay, so we'll come back to that in a minute, see how that pans out. So that's how we use Heikin-Ashi candles on different time frames. If you want to add indicators to a Heikin-Ashi chart, like you saw, if you eagle-eyed of you would have seen on that live chart, I had a ATR. Here it's got moving averages on. The value takes, when they calculate the moving averages, they use a Heikin-Ashi calculation. So just be careful if you're adding it's like MACD or stochastics to a Heikin-Ashi chart. It doesn't use it uses the values from the Heikin-Ashi calculation, the averaging charts. But again, if you want added confidence or other indicators on rather than just pure candle patterns, you can do that. Here I've got the 49 and the 13. It's one of the on the high, certainly on the high time frames. It's one of the more successful smoothing of the moving averages. The 13 and 49. Doing a lot of back testing on that. If anybody's interested. So the message and the action. So if you've got green upper shadows, no long shadows, it's a strong trend. Buy if you're not already in it. Green candles expanding with lower shadows. It's an uptrend. You might want to add to your long position. But if you've got wicks at the bottom or shadows at the bottom, perhaps you might not want to. Just wait till it's clear signals. Small body, upper and lower shadows and wicks. Probably there may be some trend change coming out if indeed the trend has been established. So you might want to close some of your positions, square off, and are we going to reverse, like we suddenly flip from green to red or black to white? Oh, I keep losing my connection for some reason. Change of body color with a wick above and below. Indecision, be square. So we've got a balance of candles. So we've got doji candles. Remember, doji candles, exactly same interpretation in Heikin-Ashi candles as they are in normal candlesticks. It means balance between the buyers and the sellers. There's no clear direction. But if, next one, red candles with lower shadow, we're in a downtrend. Sell if not short, or add to your sell position. Red candles expanding with the out upper wick. That's a strong trend in the opposite direction. So the body of the candle is still the key thing. And if we've got no shadows or wicks to the north or the south, that's even key if it's in the right direction, like we saw with that trend on the S&P 500. Okay, so some of the limitations, I've already touched on them already, but some of the drawbacks of Heikin-Ashi candles, we've already mentioned about the where the price action is compared to the candle pattern, and the time gap. So the use of historical price, and remember we're averaging the prices, means that we still got a lag involved. So as with any indicator, there's some sort of time lag. So again, whether you use indicators or just pure price action, that's up to you. But with Heikin-Ashi candles, there is that time gap. The other thing that scalpers and people trading the opening of cash sessions won't use them for or criticize them for quite significantly is the lack of gaps. Some traders use price gaps to use look at momentum and triggers and entry points, or putting stop losses. With Heikin-Ashi, because we're averaging the price over the time period, you don't get any gaps. You always get a new candle opening in the midpoint of the previous candle, so it's a smooth action. That's one of its benefits. But those of you that use gaps in your trading as either as an entry point or a stop loss area, you don't get that with Heikin-Ashi candles, so it doesn't work in that scenario. And the other thing is, remember, as we say, it's an averaged over the two candles, so it can be slow to react. Normal candles can suddenly can get ahead of the turn in the market sometimes, because it can go from red to green, or we get a longer wick on a normal candlestick. So the actual lack of the two big drawbacks are the fact that we don't get the price of the offered by the broker. The bid and the ask price are very different to where the candle actually is. So if you're used to waiting for a candle to close, or following the rules of candlestick trading by waiting for the interpretation of the candle once it's closed, it's a bit less intuitive. In fact, it's actually quite counterintuitive with Heikin-Ashi candles. And as I say, on the shorter time frames, it may not work as well. But as we've seen this morning, and we're looking at that 2-minute example in the cable, it's worked pretty effectively, hasn't it? If we were just waiting for the candle color to change. Okay, but it is the smoothing that I really like. And this is another example of this. Look, this is a Heikin-Ashi. This is the euro dollar on a 5-minute time frame. You see here, the Heikin-Ashis are clearly, we've got this big series of 1, 2, 3, 4, 5 red candles here. The normal candlesticks are chopping between negative and positive. Same 5 candles here, the same time frame. We've got different mixed message. This is still negative. Big bodied candles here. Bars is on this example, so it's still negative. This might be suggesting, we've got a further out. So this is rejecting lower price. I don't know actually what happened after this, but this candlestick, normal candlestick here on this one here, is suggesting perhaps we have run out of steam. It's not yet clear on the Heikin-Ashi candles that is the end of that downtrend. Yes, the body of the candle is much smaller than it had been, so we may be running out of steam, but we'd still be very much short. This might have already closed out because of this big trailing wick on this particular last candle here. Again, should have probably run that forward and see what actually happened thereafter. But anyway, that's a different way. And again, you can use multiple setups, either indicators or no indicators. This is all same time frame here. Euro on the 5-minute, euro dollar on the 5-minute. There's the clean red only, no wicks, no shadows to the north, trend down here. Bit mixed story here with pivot points and Bollinger. I think that's Bollinger Band, is it the green thing, or is it just moving averages? They don't moving averages cross up and then they cross down, so it's very choppy. Not that it isn't choppy, obviously, with Heikin-Ashi, but this is a big strong uptrend. Then it comes down, a big strong downtrend. It's clearer, isn't it? That's what I like about this clarity. The red and the white, or the red and the green, whatever colours you're using. Here's got this very mixed, lots of indicators. So it's horses for courses, my friends. Again, same things, longer time frames. So there's a 4-hour, same thing. So you can either, as I say, wait for the colour to change or wait for the wicks to appear. It's different approaches. One's a bit more conservative, one's you're chopping and changing more. So green body, no light, strong trend, get in, let it run. Strong, a single candle. Some might want to wait for confirmation whether you get another, like we saw with the cable setup. We had 3 doji candles in a row, didn't we? So that was suggesting let's get out of this move because it's not going anywhere. It's how you want to interpret it, and how a very simple change could be it's the simplest way of doing it, but you can be further away from the price action. And again, let's see if I can get there. Move up. So there we are. That's our short position. We got green, and we could have got out there because it's chopped straight to green. So we've got got it out, but we weren't watching it, were we? So we were still short. Our stop loss would have been up here somewhere across the turn. Didn't mention about the stop loss today, but we can count again. Just use simple candle count back if we're using these short 5-minute time frames. So that was our entry count, 3 or 4 candles back. There's the last green, so you could put it above there, and that's he's still in short that. But as you can see here, so this might be just the spread on the gold on this short time frame. Big spread, relatively large spread at the moment on the 5-minute time frame, and you can see it's all the way down here. So there we go. It's because we've just opened that. There we just closed it out. So we're still short, still in the money. We might have pulled our stop loss now down to the top of that wick there. There's our entry candle. So our stop loss will be up here now, and see how that interprets. But as you can see, you either use the color change or the wick change and just add to it as we're going down. So I can see there. So we were long here, that's a positive candle. Obviously, you don't know what's going to happen here, and that would have kept you in still, but there's a suggestion that might already be just a bit of a blip at the top, and indeed that's what proved to be. So we got in here and then got out on that immediate on that red because it's flipped, and then gone short on that candle there because there's no wick to the now. So that what looked like another strong upturn was in fact the end of this leg, wasn't it? Up here, because it was the last big bodied green bodied candle to the upside. Sorry, Matt. I actually took a short as you was looking at it. I want to try retest today's low. Well, maybe we shall see, my friend. I said it's drifting lower. It's not a big strong move, but the 5-minute is, as we said on the hourly and the 15-minute chart, they're sort of biased to the downside, and certainly that 5-minute would have triggered then. So, but just be careful. Obviously, there's not a lot of moving the price today. So, obviously, wherever your stop loss is, trail it down. You should be in the money now, and certainly we'd have been in the money if we'd taken that trade there at 499. We're at 495, 497. You see the spread sort of picked up again as we moved in. So let's have a look at that. Let me just finish my slides so we can come back to, if you want to have a look at some more charts, please do. So again, it's a matter of how we interpreted whether you're waiting just for the wick. You took profit and set break even now. Where's 0? Very good. Yeah, there you go. So Matt's saying there he's took profit and his break evens at 0. I actually won't come on the screen, Matt, so as I'm presenting some slides, but best of luck, my friend. That's that way. The other way is simply just wait for no wick. So green long, red short, simple as that, and exit on change of colour. It's a much more simpler way of doing it. Whatever time frame you're on, obviously the higher the time frame, the bigger the move can be. So both positively and negatively, so be careful with that. So if there's any other live chart you want to have a look at, let's just go back to our and see what's going on. Our goal is that's dropped out. Okay, why am I losing the connection today? We're in our office here, and it's dropping out for some reason. Well, hopefully keep losing my connection. It keeps dropping out. It's because the video's not on, ironically. Oh, this is very annoying. Anyway, gold's nicely in moving low. Let's see if I can. I'm gonna wrap this up, my friend, because my connection seems to be playing up. So there we go. So what we've looked at today is the background of Heikin-Ashi charts, why we use them, how it's created, and the interpretation of the wicks in particular, and the body of the candle. So remember, in synopsis, the bigger the body of the candle, the more significant the move. If we haven't got a wick either to the north or the south of the body of the candle, that's very powerful, and you want to be in a potential trend as it's starting. As the body of the candle reduces and the wicks start appearing to the north and the south of the candle, it's suggesting more hesitation in the move, and the trend may be coming to an end. Obviously, the big limitations of the Heikin-Ashi candles is where the price action is on your trading chart compared to what the candle looks like, and the fact, obviously, the way it's important to understand the calculations behind Heikin-Ashi candles. They are average bars. They're used over two. Yes, technical issues do happen, certainly do. Monday lunchtime, we're getting some technical issues. Every new candle opens in the middle of the previous candle, so you know where it's going to open before it does. Some people like that, but the higher the time frame, the smoother the clarity and the smoothness of the move can be. And I really like them because they're very clear in the message they're telling us, because of the calculation, because of their averaging the two candles. So don't rule them out. Give them a go, whether it's on short-term scalping or longer-term timeframes. Let me know what you think of them. But I'm a real big fan of Heikin-Ashi candles simply from that clarity. My 3 favourite trading books of all time. People asking me about trading books. These are there. Mark Douglas's Trading in the Zone. If you had to buy only one of these, I'd buy Trading in the Zone by Mark Douglas. I'll get a hold of a copy of it. The whole Market Wizard series by Jack Schwager, there's about 7 or 8 now. Fascinating insights into real world famous, or what are now world famous traders and what they do, and the stories. And if you read them all, there's a similar pattern comes out with all of successful traders. It's all about what Douglas talks about in his Trading in the Zone, about discipline, understanding yourself, having an edge, not trading all the time, not revenge trading, all that sort of stuff. And then, it's a story of one of the greatest traders of all time, The Reminiscences of a Stock Operator. It's over 100 years old now, this book. A story of Jesse Livermore, The Reminiscences of a Stock Operator. If you haven't read it, read it a few times. I've read it multiple times. Not as often as I should have done, but great story, real story. People think it's a legend, but it's not. He was a real trader, made hundreds of thousands many times. 2 new books over the last couple of years that I really, really like as well. The Best Loser Wins. Tom Hoogaard's changed some of my thinking about adding to winning positions in particular. Normal thinking never wins the trading game. He's absolutely right. Tom was a head market analyst for many years in London, Danish guy. Great story as well. You can find him on Instagram and Telegram. And then the other one from a couple of years ago, Mastering the Mental Game of Trading, from a guy called Steve Goldstein. He runs the Alpha Trader, Alpha Mind podcast, where he interviews current traders and past traders. But it's really much sort of stuff I've talked about for many years as well. Steve worked in the city for 30 years as well. And it's really harnessing the power of the inner self to fuel trading outperformance. And that's what he does. And he does it on a daily basis. He coaches people to do that. Really good guy as well. But thoroughly recommend that book as well. It's taken him a while to write it. At least he's gone and done it. Well done, Steve. Thoroughly recommend that book as well. So best of luck, my friends. We are theproptrade.com. Obviously, get to our website. We're here to help you. I hope this has been of some use today. I'll see you all tomorrow. I'm not quite sure what we're doing tomorrow. We're doing some live actual trading in the open tomorrow. The US is back tomorrow, so volumes might be a bit back. There's not a great deal of data again tomorrow. A relatively busy week. We've got PMIs. We've got obviously the Fed minutes on Wednesday. We've got weekly claims on Thursday as normal. And core PCE is the key data I'm looking forward to on Friday. Core PCE Friday, the Fed's most important interpretation of prices in the US. So that's key on Friday. Durable goods also Wednesday. PMIs, I say, across the board this week as well. But I will be trading the Open tomorrow, European Open. So We shall see. And Matt's left me a message here as we're just going. It seems to my hiccups seem to be working. Gold falling nicely. So should we leave with our gold chart, Matt? Hopefully, I'll say you're in the money. I don't know if you had it. There we are. So stop loss now. Matt was probably there's our entry. So my stop loss now will be down. Sorry, I'm on the wrong chart. My stop loss now will be down here now on this candle as that's just completed. So we've pulled it down initially from here to here, and the stop loss now, if I had this position open, actually would be just above this wick there. So it'd be just above that last candle there, 1530 candles. But yeah, nicely in the money indeed, my friend. Don't get too greedy. It reverses and takes you out because your stop loss, it doesn't matter. Minimum we're winning is this about now. So there we go. And this is only on the 5-minute chart. So take care, my friend. There we go. Going lower again. There we go. So we'll see where we go. Best of luck. I will see you all tomorrow for trading the Open, the European Open. It's 7:30 GMT. I don't know if you can be around for that, Matt, but do join me for that. And see you then. All the best, everyone. Bye-bye.